Streaming and royalty businesses are well known in the precious metal space with companies like Franco-Nevada and Wheaton Precious Metals. But how does the model work in the battery metal space? I'm speaking with Mark Lafleche. He is CEO of Anglo Pacific. Mark, welcome to Kitco.
Thanks, Michael. Great to be here today with you.
You had a great year end with a jump in base metal prices, and that momentum should carry forward. What do you want to highlight, Mark?
I mean, our portfolio is hiring entirely across the board right now. I mean, first of all, cobalt prices, they've almost doubled since we acquired the stream at Voisey's Bay last year. So that's fantastic. And across copper, nickel, uranium, I mean, they're all hitting. But actually, copper in particular, I think is really interesting because if you look at the market dynamic over the last 10 years, really copper demand has been driven by almost purely a China story. And now we're experiencing a pretty major shift in terms of not only the copper demand and end markets, which is likely to support energy transition, but also we see Western economies in particular really creating an alternate source of demand that's as strong in terms of demand growth relative to China. But the bottom line is, when we look at our portfolio and we think about our commodity mix, I think it's already clear that cleaner and greener commodities with low carbon footprints are already in demand and are already going to see a price spread in pricing. But as we move forward, I think APG is incredibly well positioned to benefit from this trend. And as you probably know, we're on a journey here. Our journey is to go from where we were 8 years ago, almost 100% coal, to almost 75% today for future-facing metals. It's really amazing to just have seen this transformation. But I'm happy. I'm sure we'll speak about that a bit later, Michael.
What's the mix of metals? What's a battery metal that you have in the portfolio that works within Anglo Pacific?
I'm actually delighted to talk about this topic because, as I said a few minutes ago, we've really been on an incredible journey where in 2014, our portfolio was effectively almost 100% coal. And today, the portfolio is approximately 75% cobalt, copper, nickel, vanadium, uranium, and more. It's just an amazing change. And then by 2025, we expect the portfolio to be almost 100% base metals or really green commodities with almost no contribution from coal. And then 2026 onwards, our portfolio exits coal entirely. So, for folks who are interested in supporting the transition in terms of our capital investment into greener projects or commodities that are going to help us achieve our climate change objectives, Anglo Pacific's a pretty de-risked way to get that exposure.
What is described though? Because when I was looking through the mix, you have some vanadium there, you have some uranium there. Also, as you mentioned, you did have like the cobalt, for instance.
Mm-hmm, mm-hmm. That's right. All those have been added by way of acquisition in the last 8 years, and it's part of our journey. We started off as effectively a legacy of coal exposure. We've exited thermal coal, and the met coal is going to wind down on itself. So, between these two bookends in time, it's a journey to transform the business and reposition it for another century.
One thing, with the precious metal streamers, usually you have those metals coming out as like a byproduct, but I'm kind of used to the base metals, maybe battery metals. They're usually the primary metals. How does a royalty streaming business work in that case, Mark? Yeah,
I think in the past, there's been a perception that the model works better in precious metals for that reason you articulated, byproduct precious credits. I think the reality is, though, the royalty and streaming model is a fantastic way to get funding, even if people are looking at primary products. For example, a royalty or stream generally can be much more accretive relative to equity, and therefore, it does make sense in some circumstances to take a royalty and to displace some equity, for example, if a project is being built. But a royalty and a stream also works really well for commodities which are difficult to attract traditional project finance lending. Some commodities, lithium, rare earths, vanadium, amongst others, very difficult to hedge your product. And many project finance lenders typically require mining businesses to hedge for the at least the short-term horizon when the loan is outstanding. And therefore, our product actually is a really nice substitute, but also is also much more flexible than debt. As you know, royalty doesn't have fixed interest payments, mandatory repayments. It achieves a much smoother cash flow profile for mining companies. And actually, when you think about the need for these new commodities, particularly in some of the, not necessarily only battery metals, but commodities required more generally to achieve the energy transition, it's mind-boggling how many more new mines are actually required. So therefore, it's a very big investable universe for us.
I want to get into that because what actually is happening in the pipeline is very important. But first, sticking with the nuts and bolts of Anglo Pacific, do you have a geographic mix or a preference in terms of where you're located?
Our portfolio 8 years ago was primarily 90% OECD, and we've achieved the transformation in a way that we've maintained that roughly 90% exposure to OECD jurisdictions. So relatively speaking, these are all excellent mining jurisdictions or well-established mining jurisdictions that offer relatively lower sort of country risk. And actually, the bulk of our portfolio in many ways is very Canadian. We have exposure to Voisey's Bay, which is owned by Vale, but a Canadian mine. We have exposure to Mantos Blancos, which is now owned by Capstone, one of the leading pure play copper producers. We have exposure to Cigar Lake in Canada, owned by Cameco. Largo Resources, Canadian listed business with an asset in Brazil. IOC, owned by Rio Tinto, but via our Labrador Iron Ore Royalty Corp stake. So, Anglo Pacific in many ways listed in London, but very Canadian business by asset and counterparties.
How many deals do you think you expect to be happening over an average year, Mark?
We've been pretty slow and deliberate in terms of building out our portfolio. Obviously, there is a strategic imperative to achieve scale. And in our view, we see that being rewarded in the royalty and streaming sector. But that being said, we're very patient. We're very disciplined. We look for anywhere between 0 and 3 transactions. And if we're not seeing the opportunities that fit with our investment criteria, then we're happy to wait until one comes along that does. So we do monitor and review a lot of situations, as you'd expect. But for us, we're very focused and ultimately on growing not purely through achieving market cap growth, but by growing by delivering revenue growth, but primarily earnings per share accretion and NAV per share accretion, which will therefore drive shareholder value and in that way achieve scale.
You have some advantages, Mark, because you can see the pretty mature industry that is the streaming and royalty business on the precious metal side. Any lessons from that? What we're seeing right now anyway is that, scale really matters in that space.
Yeah, I think that's a pretty clear one, that there are a number of players on the precious side, and I think folks probably watching this video will be very familiar with many of them, if not all. I think the reality is, in the context of non-precious royalty companies, I think Anglo Pacific is a fairly unique opportunity in that there are not, other than a few names, there are very few people of significantly greater scale than where we are today. And therefore, that's really an opportunity for us. And as we grow our portfolio and diversify our commodity exposure, we really could become the go-to name for folks looking for exposure to not just battery metals, but all the commodities required to achieve the energy transition or ultimately a net zero future. That's the opportunity, that's the white space for us. And obviously, there's definitely a first mover's advantage to the first royalty or streaming company that can achieve scale in that area.
Mark, it's great to have you on because you're going to be laser focused on all of these developing projects, base metal projects around the world. And it's a thing that we hear over and over again that, we're just not going to be able to meet the demand that's going to be needed for energy transition for all of these types of metals. Looking at the pipeline yourself right now, when you look at industry, is there any particular types of projects that you would like to highlight that we may not have been aware of? Is it really looking quite dire right now in terms of actually kind of meeting need? I kind of think about things that are coming online, such as, Tex QB2 or Kamoa-Kakalua with Ivanhoe, but any types of projects out there that interest you or that are kind of exciting, or do you see really that there is kind of a fall off?
Look, I think where there's a will, there's a way. And it's hugely encouraging to see some of the policy initiatives in Canada, but also the United States to fund and help progress the development and the establishment, not only of production, but also of supply chains. That's going to be really important. And in time, I think we'll see a lot more capital available to the space, particularly if we continue to see price levels where they are today, which are, incentive level pricing, right? What does that mean? New supply. To specifically answer your question though, one thing that's really interesting is the nickel space, because the nickel, which is a fundamental part of an electric vehicle battery, but half the world's nickel is subject to a very high carbon footprint. When we acquired our Voisey's Bay cobalt stream, one thing we really liked about that investment was that Voisey's Bay globally is one of the lowest producers of carbon per unit of nickel produced. But other sorts of nickels and other nickel processes are hugely carbon intensive. And actually, a lot of the growth in supply in nickel is expected to be from very carbon intensive sources. And therefore, we're in a bit of a conundrum, right? Where if we're buying EVs, but using a lot of nickel that generated a lot of carbon, that's not quite the way to get to net zero. And therefore, I think there's going to be a lot of new technology in sort of nickel processing that's going to either transform the way that nickel's processed from maybe a hydrometallurgical refinery to from a pyrometallurgical refinery process to a hydrometallurgical process. In other words, far less carbon intensive, as well as the exploitations of deposits that in the past have been potentially trickier. Anglo Pacific Group has exposure to a really exciting project owned by Brazilian Nickel. The mine is based in Brazil, and it has the potential to produce 24,000 tons of nickel per year at one of the world's lowest carbon footprints. And I think we'll see a lot more of that in the future.
What would you like to highlight over the next 12 months? What are some milestones, Mark?
Well, we're just coming out of a fantastic 2021 with record revenue. And I think 2022 is shaping up to be equally strong, if not better. We shall see how the year plays out, but we anticipate an exceptionally strong first quarter anyways, based on where our commodity basket has been in the last 3 months, roughly. And looking ahead beyond that, for us, we're looking to rapidly delever our balance sheet. We last year completed our biggest ever acquisition, $205 million. We ended the year with around $100 million of debt. And as of last week, we're down to net debt of $60 million. So we do have a line of sight on much more rapidly delevering our balance sheet. And that really positions us to do transactions. We have firepower today in the range of $120 million. But later in the year, we think organically we could fund, without an equity issuance, $150 to $200 million in aggregate. So we will continue to be patient. We will continue looking for the right deals. But if something comes along that we really like, we're in a great position to execute and grow.
Mark, thanks for speaking with Kitco.
My pleasure. Thanks for having me.
He's Mark Lafleche. He is CEO of Anglo Pacific. My name is Michael McRae, and you've been watching Kitco Mining.